If you like what you see, if I can please request you to subscribe to my channel. So what is systematic risk? And how is it different to unsystematic risk? Systematic risk is the risk that is intrinsic to the market. It reflects economic, geopolitical, and financial factors. It considers the entire financial system. Systematic risk is unpredictable and in general difficult to avoid. It is also known as undiversifiable risk, and this sort of risk affects an entire market. Systematic risk is not associated with a given industry or a given stock. But what are examples of systematic risk, and can they be managed? Interest rate changes, inflation, recession, wars, natural disasters. These are all good examples of systematic risks. Two ways to manage systematic risk is through hedging or managing through the correct asset allocation strategy. Investors should ensure that their portfolio is diversified across asset classes like fixed income, real estate, cash, since each of these asset classes react very differently to major changes. If interest rates increase, this could provide more yield income but reduce the value of levered stocks, providing an overall balance at the portfolio level. But how is systematic risk actually measured? The measure of systematic risk is a parameter known as beta. A beta greater than 1 means the security is more volatile than the market. A beta lesser than 1 means that the security is less volatile than the market. Well, what do you mean by unsystematic risk then? When you think of unsystematic risk, you should consider a particular industry or a given security. This sort of risk can be mitigated through diversification. It is essentially the probability of loss associated with a particular industry or a security. Some common examples include the company's balance sheet, its geographic location, shrinking product demand, or simply a labor shortage. So what's the final conclusion? Systematic risk affects a larger number of securities, effectively an entire market or a segment, while unsystematic risk affects a given industry. Systematic risk cannot be controlled and considers geopolitical, macroeconomic, and sociological factors. Unsystematic risk considers factors that can be controlled and avoided by business management and comprises microeconomic factors. Systematic risk needs to be controlled via hedging or asset allocation, while unsystematic risk can be controlled via diversification. Systematic risks cannot be avoided, while unsystematic risks can be avoided and in fact resolved. So my question for the day is, what is the weighted average cost of capital?